Hello, welcome in the Wall Street University Protocol 2026 series. Lecture 2. So we covered already time cycles. Also we covered the PDRs, but as I said, I will make second part of this video because of the low quality audio. So let's start. PDRs. As you know, as you can see, we have alt high or low, so it means basically that your liquidity is your also PRA, can be also point of interest because price reacts to that, and we can find many examples of it. For example, Monday high, we patch the Monday high and we revert to the Monday low. Okay. But this lecture is not about teaching you how fair value gap looks like, because you already know it. We're gonna cover the most crucial fair value gaps. For example, let's analyze first day price action. Take a look at this specific fair value gap. This is the first presented fair value gap in that leg higher. Okay. So this leg higher, this price through previous day high, and the first fair value gap of it was this one. Pay attention to the first fair value gap of a new leg. On the other side, that's why this fair value gap is very important, because it is the first fair value gap that formed in that leg lower that swept this liquidity. Take a look how we swept that liquidity. It also swept this liquidity. This range swept low and then swept high. So if you want to measure the range, don't take your Fibonacci like this. Don't use it like this. Use the interbank price delivery dealing range. And here is the 50% of it. We swept low and we swept high. It's a little gem for you. Now let's come back to PDRs. Breaker. Sell side, buy side, sell side, buy side, sell side, buy side. Okay, so we are sweeping this low. In that case, previous day low, Tuesday low. We are displacing higher, inversing the latest swing high, and this becomes our breaker. Take a look, we are on the hourly time frame. Because everything is fractal, it doesn't mean anything. Let's go now to the 1 minute chart. So on the lower time frame chart, we can find different PDRs because of the time factor. For example, 9:30 open. For example, first presented fair value gap after open. Or maybe the first presented fair value gap after macro. In that case, this is the first presented fair value gap in the macro. Take a look how important that fair value gap was. Then I am open, also very crucial time factor level. This is 10 a.m. open. Take a look how we manipulated below 10 a.m. open, and after it we distributed towards higher prices. So smart money was accumulating long orders in that area below the 10 a.m. open because higher prices were next. Also pay close attention that price was chopping, very choppy, but it never broke that low. And why specifically that low? Take a look at the time, 10:06. So it means it was IPDA minutes. So to say, protected low. So smart money was accumulating orders below the TM open because the higher prices were next, and take a look where price finally distributed and got away of this accumulation. 10:30. New 30 minutes time cycle opens up. Pay close attention at this whole 90 minutes time cycle. We have trending distribution. What does it mean? Every new time cycle opens up, manipulate, and trade higher. Every previous cycle high acts like support. Take a look. We have previous 30 minutes time cycle high working as perfectly support here. Take a look at that. The second 30 minutes time cycle working as support right there. Pay close attention to that sequence of fair value gaps that we created displacing through that high. This is very important signature. Let's now go back to the higher time frame. New week opening up. Very crucial time-based PDRA. Take a look how from Wednesday we are trading inside of it. The reaction of this new week opening up is very telling. My current analysis is higher prices because of the fact that we are above it. So I'm expecting expansion followed by retracement followed by another expansion to finish the business in these equal highs. What's important in that for our time frame chart of the Nasdaq is this fair value gap. I will extend this to the right and I will tell you why this is very important. Take a look how we created this fair value gap before sweeping out these equal highs. After it we had reversal. This becomes the true inverse fair value gap. And take a look how many reaction we had inside of it, which means this fair value gap, the speed array, is very crucial for IPDA. So pay close attention how we're gonna react in that area. It can provide us a cute retracement chart. And after the inversion, wait for the next expansion, wait for the next retracement, and take a long position, anticipating the next distribution, because that's how phases of price work. You have expansion, retracement, expansion met with another expansion into other direction, opposite direction. It means reversal. We have accumulation, how we trade accumulation. You are waiting for manipulation below the accumulation against your institutional higher time frame order flow. Then you anticipate the distribution, or when price breaks out into your high time frame institutional order flow, it means we are bullish. You want price to retrace to the high of it, to the high of the accumulation, and then you anticipate the distribution. Expansion, retracement, expansion. And if you want to play ping pong, you can trade from the high of accumulation to the low of accumulation, vice versa. Let's go back to the PD race. Let's go to the hourly time frame. Let's clear some drawings. Previous day hourly candle, previous low or high hourly candle. Very important PDRA, because we either want the expansion through this previous, let's say, low hourly candle and then continuation, or we want the perch inversion and working as resistance. Okay, so in that case we had it was a little bit messy because we inversed that close below it, and I was anticipating distribution forming inside of it, but instead we inverse that one more time. After it we retraced to this previous low hourly candle and distributed higher. Also, coming back to the Fibonacci, mark out the 50% of previous daily range. If you are bullish, you want price to open low, form a low of the day, and then trade the distribution towards previous day high. Usually the first presented PDRA in the right side of the curve is the order block, like here. So if you want the precise entries, wait for a retrace to the order block combined with the 50% of the first distribution leg, and this is your dream entry. If you want to see how PDRAs are working, go to the daily chart because it's very clean out there. Take a look. We have liquidity perch, then we have expansion right there, and we forms a breaker because we have low, we have high, we have another low, and we have another high. So it means this becomes our quaker. And take a look how we acted on it. Take a look at this first presented fair value gap. And then you look lower. This also breakaway gap. We didn't tap into this yet. We create equal highs instead of, combined with previous long high. Very interesting price level. This one. Let's make it more adorable. Take a look how this fair value gap was working as resistance many times. After inversion, we use it as a perfectly support to sweep that liquidity and make new all-time highs.